Welcome. In this video, ZBCN coin made another new ATH. What will happen now? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When we carefully examine the chart, we can clearly say that the price has moved past a highly critical and noteworthy level. This red line, which has historically acted as a strong resistance and where the price struggled to stay above, has finally been broken to the upside with a strong wave of buying. This level had previously caused the price to pull back multiple times, exerted pressure on the market, and served as a psychological barrier. However, the price has now gained significant momentum and managed to surpass this level, resulting in a new all-time high, or ATH. This kind of price behavior is extremely positive and reassuring from a technical analysis standpoint. When an asset breaks above a long-standing resistance, it signifies more than just the crossing of a technical level. It also indicates a shift in market psychology, showing that buyers are now in control and investor sentiment about the future is improving. At this point, the fact that the price has broken above what was previously seen as an unbreakable red line signals the beginning of a new chapter in the market. Now, this red line has completed its role as resistance and is transitioning into a new role, that of support. This transformation is known in technical analysis as role reversal. When a resistance is broken and the price manages to hold above it, that level becomes an area where buyers, rather than sellers, dominate. In the event of a pullback, this red line is now more likely to act as a strong support zone. This helps solidify the price base and contributes to a more sustainable upward movement. Furthermore, the break above this red line and the formation of a new ATH has the potential to attract not just short-term traders, but also long-term investors. In the investment world, when an asset reaches a new record high, it tends to receive significant media and social media attention. This triggers the FOMO, fear of missing out effect, and may lead even previously hesitant investors to enter the market. Increased interest in trading volume then provide further support for continued price growth. Technically, breaking through this level and setting a new ATH also triggers many algorithmic trading systems. Automated buy orders are often placed just above such key technical levels. As a result, prices often continue to rise rapidly following these kinds of breakouts. A similar scenario could be playing out now. If the price successfully tests this red line as support and remains strong, then the path for upward potential is open. There are other positive details accompanying this technical development as well. For instance, when we look at the volume data, we can see a significant increase in trading volume at the time of the breakout. This indicates that the breakout is not fake and that there is genuine demand in the market. In technical analysis, the term breakout supported by volume is used in such situations and is considered a highly reliable signal. Had the price broken through with low volume, investors would be skeptical. However, in the current scenario, volume confirms the strength of the breakout, increasing the likelihood of the price targeting new highs. Additionally, the breaking of psychological resistance levels is another factor that positively affects investor behavior. Key levels like the red line are often viewed by investors as a ceiling. Once that ceiling is broken, investors start to believe that new highs are possible. But we can't base our analysis solely on this. So let's take a look at other metrics as well. Stay tuned. When we carefully examine the chart, we can easily observe that the price action has recently taken on a rather steady and positive structure. In particular, seeing that the price is moving upward with a certain slope, clearly following an ascending trend line, is considered a highly positive development from a technical analysis perspective. This type of trend structure offers very important clues about the overall direction of the market. That's because an upward trend clearly shows that buyers remain in control, market participants have positive expectations for the future, and the price consistently finds buyers at higher levels during each pullback. Ascending trend lines are considered dynamic support in technical analysis. That means the price typically reacts with buying momentum whenever it touches this line, gaining upward strength. One of the most important details here is that the price has touched this ascending trend line multiple times. The more times a trend line is touched, the more reliable and valid it becomes. In the current chart, we can clearly see that the price has repeatedly tested this trend line and has continued to rise after each touch. This indicates that there is a very strong group of buyers in the market who step in each time the price dips, pushing it back up. This proves that the price action is not random, but backed by strong market logic and investor psychology. These multiple touches to the trend line help form a healthy price structure. Rather than sharp spikes, we are witnessing a gradual and cautious rise, which is a core characteristic of sustainable trends. In a price movement that follows such an ascending structure, one of the key things investors should watch for is whether the price makes a sustained close below the trend line. However, the current structure shows that this trend line has held up very well, and the price has not fallen below it. On the contrary, strong upward reactions have followed every touch. This is the clearest indication that the market accepts this line as strong support. These consistent touches on the trend line also indicate stability in the market and confirm that technical rules are in effect. In chaotic and inconsistent markets, such clear trend structures rarely form. But here, the direction is clear, the touches are clear, and the reactions following those touches are quite strong. This tells us that the price is continuing its upward journey in a very healthy manner, and progressing along this trend line is a significant technical advantage. In addition, these kinds of structures create favorable conditions for both short-term and medium to long-term investors. For short-term investors, the trend line serves as a potential buying zone during pullbacks, while long-term investors may expand their positions, trusting in the sustainability of the trend. Confidence in the trend line is a factor that directly affects investor behavior. A solid technical structure leads to more stable price movements. Furthermore, the psychological significance of this rising trend is also extremely important. Market participants generally gain more confidence when they see a steadily rising price movement, especially when it is consistent and orderly. This increase in confidence leads to more buy orders and encourages new investors to enter the market. In this way, the upward momentum becomes a self-reinforcing cycle. The current structure seems to reflect exactly that. Looking at the current state of the market, it is noteworthy that there is a serious upward acceleration in price movements. The price has recently surpassed its previous high and formed a new high. This is generally considered a positive signal for the market, as it indicates that the uptrend is continuing and buyers are still actively participating in the market. However, alongside this positive development, there is a technical detail that should not be overlooked by careful traders. There may be a divergence in the RSI indicator, classically called a negative mismatch. When the price makes a new higher high, but the RSI indicator makes a lower peak relative to the previous high, this is often considered a negative mismatch in technical analysis. This implies that despite the strong rise on the surface, momentum, the intrinsic energy supporting the rise, has diminished somewhat. However, this in itself does not necessarily paint a negative picture. On the contrary, if evaluated carefully and strategically, such mismatches offer traders the opportunity to take precautions, manage positions, and take more informed steps. In technical analysis, the RSI indicator not only indicates overbought or oversold zones, but also gives us important clues about the strength and sustainability of the trend through its relationship with the price. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.